Walmart just reporting and quarterly results. Let's get to Courtney Reagan. She's back with us. We got the numbers.
Hi, Joe. Yeah, so Walmart reporting first quarter adjusted earnings of 61 cents per share. That's above the 58 estimate on revenues of $165.6 billion. That one's slightly below consensus of $165.8 billion. Now, the U.S. same-store sales, those rose by 4.5%, also above expectations, driven by health, wellness, and grocery. Continued share gains in grocery, also noted in the release. Now, net U.S. e-commerce sales grew 21%, and this is notable. This is the first full quarter where e-commerce was profitable. Walmart had said it was on track for profitability at its investor day. It does indeed look like it happened. Now, the retailer affirming annual guidance just as it did at its investor day in April. Walmart also forecasting second quarter revenues to grow between 2.5% and 3.5%. But Walmart is not giving guidance for second quarter operating income, due largely to the wide range that it would have to give because of the tariff impact on its accounting method. This is a little wonky, but I spoke with CFO John David Rainey, who explained that Walmart uses the retail method of accounting, which uses a cost to sales price ratio, which then is very hard to predict narrowly with tariff rates changing wildly. So Rainey says the quarterly fluctuations are going to make it really difficult, but thinks that over the year, it'll even out. So it's holding its annual operating income estimate. He explained that we import 1/3 of what we sell in the U.S., China, and the largest, of course, is China, then followed by Mexico, Canada, India, and Vietnam. He also said we are pleased on the progress that's been made by the administration on the tariff levels that were announced in April, but they are still too high. We will absorb some of the price increases, and suppliers will too, but consumers are likely to see some price increases, and that concerns us. But Rainey said managing inventory is really going to be what sets retailers apart in this environment, noting, quote, we have not canceled any orders with suppliers. We have reduced some orders on occasion. Now, Rainey says consumers right now are discerning, mindful, maybe a little concerned about possible looming price increases, but their behaviors have not changed. I will speak with Walmart CFO John David Rainey in a first on CNBC interview on Squawk on the Street about all of this and more. Obviously, a very important company as we're looking at the global landscape and how trade affects retailers.
I need a couple decimal points to get to what that revenue shortfall represents on $165 billion.
It was 165.84.
Yeah, so that's 200.
And they were at 165.
No, it's de minimis. What's more important is the same store, U.S. same store,
right, up 4.5%, which is, I think, 33 quarters in a row of positive comparable sales.
And the shares are up. I mean,
that's
nearly
pretty
3%
incredible.
Pre-market, yeah.
We got to get back to Haney, but you also said affirming. And you said they had done that before.
So then it would
it could have been reaffirming.
It could have been that time.
Normally we
don't.
Normally they're not reaffirming, but we say it wrong. And this time, that's amazing.
And you're right. And then I mixed it up, and I had the chance to do it right.
No, but they didn't reaffirm net income, though, you said.
That's true.
So then they didn't.
Okay, fair.
You were listening very closely.
What else am I supposed to do?
Is it affirming or is it reaffirming?
I think I'm here.
This is a case of reaffirming.
I'm daydreaming. I'm drifting off. That does happen.